to like a cash open or a wholesale price level, which is here. We might not be there at this stage, and the price might be doing something like this. It doesn't really matter what the price is really doing, except it just helps us to make a decision, of course. It helps us to make a decision. But coming into the cash open, if the dealers at any stage look at this and say, right, we think the market's going to be bearish at the cash open, so this is what they expect to see happening. They expect to see a lot of short sales at the cash open. They don't necessarily wait for the cash open to get the short position, right? Their job is to get short inventory. So the dealer's position somewhere to the left-hand side of this cash open, or this big wholesale, or this big data release, or this whatever. So the dealer's conversation at this here is to accumulate a short position, right? So the dealer's job is to accumulate a short position prior to this happening, because there's going to be a big requirement. Sellers at the cash open, right? So if there's going to be sellers at the cash open, what's the dealer's inventory? What's the dealer's inventory going to be if the sellers come in at the cash open? The dealer's inventory is going to be long, right? So do the dealers want long inventory? No, the dealers don't want long inventory. They don't want long inventory, do they? Because it's a bearish market, so they certainly don't want long inventory. So if they don't want long inventory, what must they do? They must build a short position prior to the cash open. They must build a short position prior to the cash open, so that when they do get all of this long inventory coming in, it's not at their expense, it's just basically profit taking for their short position into the cash open, yeah? So obviously if we see it happening, and it's not always guaranteed that it's going to be seen because the dealer doesn't control it, the dealer doesn't control how many buyers step in, but you'll see it because what will be happening, for example, will be something like this. Yes, is this something you'd be seeing live in the charts? There'd be some big ones, maybe some small ones, it doesn't matter, but this is what's happening in terms of maybe the delta side of the marketplace. So this is delta. So if this is delta, we can already recognize that what's happening now is, of course, the dealers probably from here start working into that. Yeah. And obviously when we started to see that, we can start to recognize how clear this storyline is as it evolves from here. How did we do with that 16,400 sell in the NASDAQ, guys? How did we do with that 16,400 short NASDAQ position? 120 points, Alan. 120 points off that 16,400 sell again here at 12 o'clock, and then this big sell-off of that wholesale price. You see it? I mean, it's not a small sell trade, is it? 16,400 handle, the 400 wholesale in the Qs. Yeah, it's a pretty good trade, right? Well, they don't choose, remember, Miguel, they're not choosing to take profits, really, are they? They've got to offer two-way money, so they don't got a choice in the matter. If they want to keep getting their perks from the exchanges, they don't have a choice in the matter. They've got to offer two-way cash. So if they've got to offer to-be cash, the one thing they don't want to do is offer it against a naked inventory. If they've got nothing in their inventory to trade with, if the selling comes in hard, they'll lose a fortune. It's the same as if the buying comes in hard, they'll lose a fortune. They've got to try and find a way of closing off that trade, which is a conversation we had ages ago, which Kim's never heard of before, and that is they take it higher to close off the buyer. They actually take it higher to close off the buyers because buyers take profits and it adjusts the dealer's inventory for them by doing that. So the dealers have limited things at their disposal. Withdrawals of liquidity is one of them. Withdrawals of liquidity is the same thing. It's the same concept of closing off the buyer to, as the price goes higher, those concepts. But it kind of falls into line with the rest of that process, that thought process. So they don't have a choice. They've got to offer two-way spreads. Otherwise, they lose their privilege.